This video is going to be a little bit shorter than my usual videos, but I think you're going to like what I'm going to share with you. I'm going to demonstrate how you can use RSI, or Relative Strength Index, the indicator, to effectively exit a trade. Now, if you search around, you'll find that RSI is more commonly used as a trade entry or a trigger to get into trades, and I've done quite a lot of videos using RSI to get into trades myself. But today I'm going to use RSI paired with an effective entry method to make a strategy much faster or make the trade duration much shorter. I was just playing around with some strategy ideas the other day and I almost came across this by accident, but I thought you guys might like to see it too. Firstly, let's have a look at how we get into the trades. We're looking at the daily chart here of pound dollar. Now we're looking for extreme moves, either up or down, and we're going to measure those moves by looking for either 4 consecutive green candles or 4 consecutive red candles. So looking at an example here, we've got 1, 2, 3, 4 green candles, so then we short on the open of the next bar. And then if we look here, we've got 1, 2, 3, 4 red candles, and then we buy, do the opposite, on the open of the next bar. And see again here, here's the 4 green candles, and we short on the open of the next bar. If you don't already know, green candles are green because the closing price is higher than the opening price. So the market opened, and then by the end of the day, the price was higher, so it was a green candle, and the opposite makes up a red candle. And that's the simple entry technique. And by the way, the strategy actually works very well in its form, like you can see here, which is a stop and reverse, which means at the moment on this chart, I'm not using the RSI to exit. All I'm doing is waiting for an entry signal in the opposite direction. So we've seen the 4 green candles, and that's our signal to go short. So we're looking for a reversal. The market's had a quick push up and we think it's gone up too high, needs to come back down. So we go short, and then we only exit when we see an extreme down move, which was the 4 red candles. So we exit our short trade, which in this case was a decent profit. But not only do we exit the short trade, we enter a new long trade at the same time. So stop and reverse. And a little bit later, I'll show you the comparison between the stop and reverse strategy as it is here and using the RSI exit. But this video is all about the RSI exit, so let's have a look at that. And in this chart, it's exactly the same. However, I've included the RSI indicator. Once you've applied the RSI indicator to your chart, you want to adjust the length to a 2 period. Standard settings are normally 14, but adjust it to 2. That makes a very fast reacting indicator. And then we want to be looking at the levels of overbought levels, you see this green line, of 80, and the oversold levels of 20. They're fairly standard levels for the RSI indicator. And then all we're doing is, once we're in a trade, for example, we're in a long trade here, so we've seen the 4 red candles, we've bought in, and then we're only exiting when the RSI goes into extreme overbought, which is the 80 level. So it crosses above that line. So it was below it, then it's crossed above it, the daily bar has closed, and the RSI is above 80, so we exit. You can see here I've got RSI long exit. Opposite for short, we've gone short here, we've got the 4 green candles, we've gone short, and then we're waiting for the RSI to cross down below the 20 level, which it did here, and then we've exited RSI SX or RSI short exit on the open of the next bar. So both the entry and the exits with this strategy are really easy to spot on the charts, and that's especially helpful if you're a manual trader, so you look for trades manually and place them manually. So now let's have a look at the results of the backtest, and I've got backtest data from January 2010 through to October 2022, and I've included some costs. I've included 4 pips or $40 worth of costs per trade. I've got both the strategies in the same window here, the bottom one being the stop and reverse, and the top one that's got the RSI exit. And straight away you can see actually there is a few more trades using the RSI exit because we're coming out of the trades much faster. Let's have a look at the performance report using the RSI exit. $33,500. equity curve. Equity curve close to close. It is quite flat early on, but it has been working pretty well in later years. Got 171 trades, a fairly decent size average trade. But look at this. This is the average bars in trade, or in this case, the bars are days, so it's the average days. We're looking at 9 days for the average trade duration. Now, we'll compare that to the stop and reverse in a moment. In fact, if we look at the time analysis as well, the percentage of the time that this strategy gets us in the market is just over 40%. So definitely less than half the time. And we compare that, looking at now the stop and reverse, percentage in the market almost 100%, because the only way we're exiting is getting into a new trade in the opposite direction. Some of you might like that, some of you won't like that, because being in the market does increase our risk. Performance summary, look, it's making much more money though using the stop and reverse. And the equity curve, again, is quite nice. Looking at the total trade analysis, we have got less trades. Remember, we had a lot more last time. A massive average trade value compared to the quicker exit using the RSI. And the average bars or average days in trade now is almost 30. So that's comparing that to the 9 using the RSI exit. So if you like to get in and out of trades quicker, that's when using the RSI can be beneficial. You can see by changing the exit really changes the characteristics of a trading strategy which uses the same entry criteria. So depending on your preferences, you can trade either the fast RSI type exit or the longer, more profitable stop and reverse type exit, or trade both. Split your allocated position size into 2 and trade half with one strategy or half with one exit and half with the other exit. Personally, I really like splitting up exits and position sizes like that. But bear in mind, none of these exits are using a stop loss yet. But I can tell you from experience that you're going to use quite a wide stop loss on this strategy, as with a lot of mean reversion type strategies. If you like these kind of rule-based strategies, you can grab my free 22-page Beat the Market strategy guidebook. And if you use the link down below, like I said, it's 100% free at the moment. In that, I'll include 3 more rule-based strategies which have been proven, and you can trade them manually or automated like I do. I'll put the links for that down below in the description. Or, better still, enroll in my popular trading course, in which I'll provide you with 6 more proven trading strategies. But not only will you get the strategies, I have numerous lessons in there covering things, important things like position sizing, strategy monitoring, and so on and so forth. And for those of you who are a multi-charts like I am, or a TradeStation user, I've even given you the code for all those 6 strategies. So you can use that, take that away, trade them, or even modify them, improve them. It's there free for you to do what you need with it. Again, links for that will be down below in the description. Well, that's all for this quick video. And that's a way that you can use RSI to give us very quick exit signals instead of the usual entry signals. I hope you've enjoyed it and I hope you found it useful. Please give it a thumbs up and maybe subscribe for more content a little bit like this. But until next time, this is Jared Goodwin, and thank you.